Dear traders, it is very important that you understand when to throw your stop loss, when to move it to break even. Now there's a big question, when do I move my stop loss to break even? How do I manage my trades? Now it's always a journey in actually understanding what's the optimal strategy for you. But my tip is this, right? If you are up at least 1 or 2%, you should not be losing on that trade. For an example, if you have a $200,000 funded account or an account, right, and you're up $2,000 or $4,000, there should be no reason you make a loss on that trade. Now, I'm not talking about the people who have a 1 to 12 RR stop loss 2 pips. I'm talking about the normal people who have stop losses of 30 pips, 40 pips, whatever, 50 pips, 25 pips, normal stop losses, right? If you are up 4 grand, $4,000 and your TP is $8,000, there is no reason you should be losing on that trade. Because if you are up 4,000 and you end up being negative 2,000, that's a 6,000 difference if you include your unrealized profit. So if you had 200k, you could have been up 204k, but now you're down to 198k. That's a 6,000 difference. You should not be losing, and that's the approach I take. When I'm up 6,000, 4,000, like around 1.5%, 2%, 3,500, 4,000, I say to myself, I am not losing on this trade. There is no reason for me to lose. I am protecting my risk. I am moving it to break even. And if it goes to break even, I have the calmness in my emotion and the logical approach to flow back into the market. So I'm not concerned about going back to break even. A lot of us, especially me in my first few years of trading, is when it came back to break even, it would affect me psychologically because I was up. But I have shifted the narrative in my brain. Now it's okay, I'm up 4,000. I should not be losing on this trade. My stop loss goes to break even. My stop loss goes to break even. If it hits break even and there is another trade opportunity and I think the move is still valid, I will enter again. No problem. It's better than losing. Now that has helped me so much because I would have had so many -1%, -1%, -1% accumulating over a quarter if I didn't make this approach. Now another rule I have is that after I'm up, well, my TP, my risk to reward on average is a 1 to 2, 1 to 3, 1 to 4, around that. So when I'm up 1 to 2, anything above that, I am looking to get out. I am not looking for the big home run trades because I have seen there's been so many times I'm up 2% and I lose the trade or I lose my profits. But then I think to myself, if I just took profits at those 2%, 2%, 2%, I didn't try to get the home run 5, 6% all the time, right? I would be up 10% easy this month. But I don't value that 2%. So now my rule is that if I'm up 2%, right, I am looking to get out. Not doesn't mean I'm going to close the trade or anything, but it's just I'm happy with the 2%. If I'm up 3.5%, I'm looking to trail my stop loss to around 2%. So even if the 3.5% reverses, I don't lose the whole 3.5%. At least I get 2% out of it. So in that case, I only lost 1.5% unrealized profit. So that's the approach I take. If I'm up 1 to 4, I am not. There's been so many times I've been up 3% on my account, and I don't trail my stop loss, and it just goes to break even. I just lost 3% unrealized profit. Why? If I am not trailing my stop loss, this is what I am saying. This is what I'm saying indirectly, right? I am saying that I am okay with this unrealized profit being put at risk because the market is random and it can reverse at any moment. So if I'm up 3% and I don't trail my stop loss, that whole 3% is at risk because as of right now, I can take that money, but I'm not. I'm leaving it to the market to go to 4%. I'm up 3%. My risk to reward is 4%. There's only 1 more percent for me to gain, right? I'm up 3%, my risk to rewards 1 to 4. There's 1 more percent. The market needs to move up a bit more for me to get that 4%. But I'm still putting that 3% at risk because it can reverse. So now I have to weigh up the pros and cons. There's a risk, there's a con that this 3% is at risk and that it can reverse on me at any moment and I get nothing or even make a loss. Or for me to make that extra 1%, or I trail my stop loss to 2%. So now out of this 3% unrealized profit, only 1% is at risk since my stop loss is trailed to 2%. I hope this is making sense. I could draw a diagram and show you all if you want me to make another video. But what I'm saying is 3% I'm up, there's 1 more percent to gain. I trail my stop loss to 2%. So even if price does reverse on me, I lose 1% unrealized profit to gain another 1% or 4%. I'll say that again. I am up 3%. I trail my stop loss to 2% profit. Now, if price does reverse on me, I lose that 1% unrealized profit. Because I was at 3% now, I got taken out at 2%. Lost. Now, what would I have gained? I would have gained that extra 1%, right, if it went up instead. If it didn't reverse and it went to my TP, I would have gone from 3% to 4%. So in this case, I am risking 1% unrealized profit to gain 1% additional profit. So that makes more sense than me, rather than risking 3% unrealized profit to gain that extra 1% for it to hit my TP. Now, when you think of it like this, you understand, okay, I'm not tied to the outcome no more. It's more about what is the best strategy for my business. The best strategy here is I don't want to leave money on the table. I want to manage this trade. Now, the best possibility is if you go on the lower time frame, like a 15-minute, you control your stop loss above the higher lows, right? And if you do that, eventually you don't want to throw your stop loss too aggressively though. For an example, if all the time frames are trending, right, and it's very bearish and it's a very high probability trade, I am a bit more conservative in the way I adjust my stop loss. I adjust my stop loss based off, maybe the 4-hour lower highs if I'm swinging it, or if I'm taking a more of a long-term trade. If I can see that we have just had a nice break and retest set up, the daily is bearish, the weekly is bearish, I may just hold the trade. And if I'm up 4%, then I will start trailing my stop loss, or 3% and the market's moving rapidly, I won't trail my stop loss as much, right? But if there's news around the corner, if the markets are choppy, if it's a medium probability trade to a medium to high probability trade, I will be a bit more aggressive in my stop loss adjustment. But overall, I always have at the back of my mind the principles I just said at the start about your unrealized profit, right? Many things to take from this. Break even, you never lose by going break even. So if it does hit your break even, you can always re-enter the trade. Number 2, you don't want to leave too much unrealized profit at play, because at the end of the day, that could be closed. That trade could be closed and into your bank account. You're putting that at risk just to make another extra 1%. So it's good to trail your stop loss, maybe obtain some amount for yourself, and if it does reverse on you, at least you got something out of the trade. I don't take partial profits because I feel like it mitigates my risk to reward over a series of trades. And finally, I sometimes take an aggressive approach in adjusting my stop loss, or a conservative approach. I am more aggressive when there's volatile news, when it's choppy, when I'm a bit less confident on the trade. I'm more aggressive in my stop loss adjustment. Very simple. Thank you very much. I hope this video helped you. If there's anything you want me to touch on, just drop a comment below.